Welcome everybody. Just a quick update this afternoon, just to coincide with the Reserve Bank, who have announced that the cash rate is going to be reducing down to 1%. So that's a further reduction of 0.25, which follows on from last month's, the June reduction of 0.25 also. So we now see the cash rate at a all-time low of 1%. Now that's fantastic for our borrowers, and will further reduce the the minimum monthly repayment required. What we want to do though, we want to see all the banks certainly pass that rate cut on. So if we look at last month, we saw probably half of our lenders pass the full 0.25% on, and then we've seen bits and pieces after that, 0.22, 0.2, 0.18, etc. So we're going to see a bit of that again, I would have thought. I'd love to see them all pass on 0.25. Don't think it's going to happen, being the skeptic, but let's keep our fingers crossed anyway, and let's hope your lender does pass on the full 0.25%. Just a couple of quick tips for you regarding that though. If you're making your monthly repayments at the moment and they're all quite comfortable, and your household budget allows for it, I would try and keep your repayments definitely the same. Don't reduce them down to the minimum repayment. So this will just enhance or reduce the period of the loan repayment. We don't want any of our clients taking 30 years to pay off a home loan. So every little bit in that account will make a difference to you. The second one is not so much with borrowers, but we have a lot of clients who are also deposit clients, and where they hold funds in bank accounts and in deposits. So a really interesting time for them at the moment, and the first time that I can probably ever recall, we've now got banks offering interest rates for their deposit clients that's actually below inflation. So in real terms, if we stick our money in the bank, the real value of our funds in the bank are going to go backwards. Now that's going to provide a challenge and some temptation for many people, particularly those that are probably within 10 to 15 years of retirement. They will potentially be tempted to look outside of the typical bank deposits to try and make their money work a little bit harder. Now I fully understand that, and that's just human nature, but can I just encourage everybody to tread carefully in that regard. I'm not saying put your money in the bank, but certainly if you hear the 5 and 6 and 7% offers out there for funds, there's going to be a real element of risk associated with that. So just as I say to my daughters quite often, and it rings true when it comes to finance as well and our deposits, is that keep your investments classy. So stay classy, and we just need to ride this little period out. So you don't want to put all your capital and all the hard-earned funds that you've accumulated over the years. You don't want to put them at risk. So please just tread carefully there, because there will be some temptation to try and chase that little bit of extra income out of the deposits. That's all I've got for you today. If you've got any inquiries or any questions regarding either your home loan or your investments or your retirement planning, please give us a buzz or contact us here at Mortgage Choice in Wantirna. Have a great day. Thank you.